Good evening, everybody. Welcome back to Strongman Personal Finance. My name is Christopher Belly. I'm a certified CPA accountant. I'm a fake boglehead investor. I'm author of the book Stop Being a Broke Loser. It's on Amazon. And we got to talk about the dangerous disinformation that a very popular YouTuber named Joseph Carlson is spreading about dividend investing. Now, I've noticed for the longest time that a ton of people seem to be obsessed with dividend paying stocks. And I don't know how many videos I have to make on this subject to explain to you people that buying stocks simply because of the dividend is completely idiotic, stupid, and tax inefficient. I don't know why I have to keep saying this, okay? But it seems like the largest YouTubers always seem to have the most dangerous and incorrect information, and that includes buying dividend stocks. I have noticed on YouTube a lot of people simply look for dividends. They filter on a bunch of stocks. They find companies, ETF stocks that have the highest dividend yield, and that's the stocks that they buy because in their minds, if a stock has a 15% dividend yield, they think they're getting a 15% return. And they think it's as easy as that. You just find the highest yielding dividend stock. Now, I don't think Joseph Carlson just simply filters on dividend yield, but he has some very ridiculous ideas about what dividend investing is all about. So let me go ahead and show you this presentation, this video that Joseph Carlson just did out, and I'm going to address this point by point. Here we go. So this is Joseph Carlson, and he's saying here, if I can actually get this crap to go away, how dividend stocks, I don't know how he has a quote there or why he has a quote there, make you money. So point number one, dividend stocks pay income. That's true. They do pay income, which is taxed either at long-term capital gains rates or preferential dividend rates, or at ordinary rates if you're investing in things like a real estate investing trust, or you get a non-qualified dividend, which is part of your return. About 40% of the total return of the market is income. The income portion of the market is more predictable. Let me explain again, ladies and gentlemen. A company has several options when they have cash on their balance sheet. Okay, they can use that to reinvest into the business. They can buy property, plant, equipment. They can make an acquisition. They can let it sit there and just build up for future opportunities. Or they could take that cash, or they can even do a stock dividend if they want. They can take that cash and pay that out to their shareholders. They usually do this because they have nothing better to do with the cash than to give it back to the shareholders. So this statement is correct. Number one, dividend stocks pay income. They do. It's income, bro. Taxed, which is part of your return. So let's move on to point two. And you'll see why this is wrong. This all ties together. Two, dividends are reinvested, buying you more shares, which increases your income. Look, ladies and gentlemen, okay? When you reinvest a dividend, you do get more shares because what happens is when the company pays out the dividend, when the dividend hits the when the dividend is declared, there's multiple dates for a dividend. You declare a dividend, you have the ex-dividend date, you have the date of record, and you have the payment of the dividend. When the dividend is paid out, and I'm telling you, go check your mutual funds. You'll see this. You will see the price of your mutual fund or your stock drops proportionately to the amount of dividend that is distributed to you. So if you get a 1% dividend, let's say over a quarter, your stock drops by 1%. So while you get more shares of the company, your actual investment is exactly the freaking same. Go look. I'm serious. Go look at your mutual fund statements. I used to be so excited about my little dividend that came in from my Target retirement fund, mutual fund that I have at Vanguard. And I literally figured out that the actual balance of my account is exactly the same. There's no difference whatsoever. So this is not, well, it technically does increase income, because what you're doing is you're converting an unrealized capital gain. When you don't sell a stock, you have an unrealized capital gain. You're converting that into taxable income that hits your 1040, your tax form at the end of the freaking year. That's all you're doing. God. Dividend paying companies raise, this is point 3. Dividend paying companies raise the dividend payout over time. Your dividend income should increase even with no reinvestment. A company has earnings, all right? And generally what happens is a company has profits. They either leave that in the company, it's called retained earnings, and they reinvest it, or they pay it out as a dividend. Generally, companies' earnings increase over time. And let's say they pay 20% of their earnings in a dividend every year. Well, if their earnings increase every year, even if they keep the ratio the same, your dividend will increase. But your dividend comes from your earnings. It comes from your profits. The dividend means freaking nothing whatsoever. It does not matter. The only thing that matters is a company's underlying earnings, a company's underlying profit and loss, because that is where the dividend comes from. And if your dividend isn't generally coming from earnings, let's say your company is borrowing money to pay a dividend, that's dangerous. And companies will do that. They'll do all sorts of shenanigans to lure you people in into buying the stock because, oh, my dividend yield. It's ridiculous, okay? So yes, your dividend will increase simply because the company's earnings, profits increase. Point 4, the company grows revenue, market share, and earnings, causing the price to increase. This grows your net worth over time as the price increases. Okay, I don't understand that, to be perfectly. I mean, like I get what he's saying, but what does that have to do with a dividend? Your return is a function of your capital appreciation, how much your stock went up, and the amount of dividend that was paid out to you. Why do stock prices generally go up? Because of earnings, the underlying profits, and the future expectation of whatever those profits are going to be in the future, discounted back to the present. Why else do stocks go up? Because sometimes clowns just buy the stock. But generally, stocks go up because the underlying earnings are projected to increase at a certain percentage, and the market discounts that and assigns a multiple to it, okay? And the dividend goes up because the earnings go up. You guys see what I'm talking about here? It's all about earnings. Look at Berkshire Hathaway. If Berkshire Hathaway's earnings go up, guess what? Generally, the stock price is going to follow that. The dividend, which they don't pay, by the way, has nothing to do with it. 5, most dividend stocks will also have leftover cash for buybacks, causing EPS growth. Buying back shares also makes it easier for the company to raise the dividend. Look, he even says it right there. He's basically saying most dividend stocks will have cash left over because they get that from their earnings. So looking at all these 5 points, right? Dividend stocks pay, let's go back to point number 1 here. Dividend stocks pay income, which is part of your return. Imagine you have 2 companies, right? Let's say they have a 10% profit margin. Both of them have it. They're the exact same company. They have a 10% profit margin. And let's say both stocks, theoretically would go up 10%. It's the exact same company. Well, let's say one company doesn't pay a dividend and your stock price goes up by 10%. You have a 10% return for that period of time. Let's say this exact same company also pays a dividend, which roughly equates to 5% of the company's stock price. Well, the stock will go up by 5%, and the dividend will be 5%. and you add those two together, and that's 10%. So on one regard, you get price appreciation with no dividend, unrealized, untaxed at 10%. And then you have the exact same company that decides to pay a dividend, and you also get a 10% return because you had a 5% dividend roughly and 5% capital appreciation. However, you paid tax on the dividend. It's all about the underlying earnings. Stop buying stocks because of the dividend. It doesn't freaking matter. The only reason a dividend is pertinent is because it's kind of a decent filter to show you whether a company is profitable. And it may not necessarily be profitable. But I'm telling you, the vast majority of you dividend investors, I know what you're doing. You literally just filter on high yield dividends, either ETFs or stocks, and you buy the ones that have the highest yield. That's literally what you're doing. I know it. Okay. And that's a huge mistake because if you have a stock that pays a 10% dividend, but the share price goes down by 20%, your return is negative 10%. Oh, but I got a dividend. I mean, there's only so much I can say about this. Like, all I do is talk about these stupid freaking dividends. And all you clowns do is, oh, well, you don't understand a passive income, compound growth. You know, you could own a stock that never pays a dividend, and you could still have compounding growth because the company's underlying earnings are growing at a compounded rate, and you can still get a compounded rate of return. Your freaking dividend payment has nothing to do with it. Dividends suck. I agree. What's up? I'm unclear how Strongman feels about dividends. Now, I mean, yeah, dividends are cute, but if you just realize the simple fact that the stock price goes down, if you don't believe me, go check your freaking mutual fund. Okay, I'm serious. I have a target retirement fund in my taxable brokerage in Vanguard, and literally every freaking year, I go to the Boglehead forum, right? Or I go to the investing forum on Reddit. People are like, "Oh, guys, it's the end of the year, and my mutual fund just went down by 2% out of nowhere. What happened? I don't understand. The market went up. Why did my mutual fund go down? Because it's about to pay a dividend, you clowns." And you can see the exact value. There's no change. Nothing was done. Cash left the company, and then you put the cash back into it. I have in VT. VT, my ET. After I learned that dividend literally is subtracted from the stock price the following trade, I realized how foolish I was. It is, okay? It's ridiculous. It goes down on the ex-dividend date. But in accounting, you're actually debiting retained earnings and crediting dividend payable on the date of declaration. In accounting, there's only two entries. You declare the dividend, you debit retained earnings, you credit dividend payable, and then you pay the dividend, you debit dividend payable, you credit cash. You're debiting retained earnings. That's part of the company's equity. What? Accounting's stupid. It's my Tesla. I have 95% in VT. Ooh, baby. I like it. Making me all hot and bothered here. You can reinvest in dividend stocks on a tax advantage account. Okay, but at the end of the day, even inside your tax advantage account, the stock went down in proportion to the dividend that was paid. So why focus on dividends? Buy the whole market. Growth and dividends. Everything. The main point is dividend stocks don't have 5 ways of making you money. All stock returns come from the earnings of the business. His number 4 point. Exactly, Cole. It's not freaking hard. Look at an income statement. What's that? How many times does Shawn have to say it? Just buy Tesla. I mean, honestly, exactly. If you were looking at Tesla back in the day, you're like, oh, what's Tesla's dividend? Oh, and they don't have a dividend. At least the last I checked, Tesla doesn't have a dividend. You would have immediately discounted Tesla because they don't have a dividend. That's stupid. But if you buy a total market index, total world index, I had Tesla in there, okay? Very small percentage. Now it's like 1%. But I didn't care about, I don't have like a dividend ETF. It's stupid. A stock deciding to start paying a dividend doesn't make the business suddenly different. It's just cash leaving the balance sheet. That's literally it. I have a dividend portfolio in my Roth, no taxes. Yeah, but you're excluding lots of companies that don't pay a dividend simply because dividend, when it's all about the underlying earnings. I love my dividends, boost my yearly income by 15%. No, it does. It boosts your taxable income by 15%. The trick is to find a growth company with a small but growing dividend. I wouldn't buy a stock just because there's a high dividend like 3M or Intel, blah, blah, blah. They all have little to no growth. I mean, just buy a company based on the earnings. Only look at the earnings. I mean, obviously there's other factors, but I'm saying the earnings are what really matters. Are you happy with your accounting degree? Good chance of making good money. Yeah, you get your CPA license, it's easy to get a job. Trust me. It's easy to make a decent amount of money, and you can be self-employed. Oh, it's Alex. Alex Finance dice no al condenato. He's investing with Cole in the house. He is. He's on my lap right now. Is he down on church? Bubbleson bought Church and Dwight and CP because is a Mormon. Oh, he's a Mormon. Uh-oh. Uh-oh. I'm a Mormophobe. Disney got rid of their dividend and it sucked anyway. It was semi-annual and barely 2%. I'd be happy about that. Like, did Disney pack on a ton of debt? It's like, yeah, pay off the freaking debt. Keep the stupid dividend. Don't forget to smack the like button, ladies and gentlemen. You know, yeah, we know they are taxed. So effing what? I'm not going to make income because I got to pay taxes. Maybe I'll quit my job. No, that's not what I'm saying. I'm saying you can make earnings, you can have capital appreciation and not pay tax on it. If you never sell a stock, you don't pay tax on it. Oh, really? There's no convincing you freaking dividend people. Like, I don't know how many times I have to say this, but there's no convincing. Can I have your VT dividends? I'll pay your tax. No, you're not taking my dividends, okay? It's part of the return, but if VT didn't pay a dividend, it would just, the total return would still theoretically be the same net of taxes. You should dress like Jeremy and invest like him in a stock simulator. Man, if I wanted to get a massive YouTube channel, I would just, stocks always go up and just buy this stock. It's going to make you rich. I'd like show off my portfolio. Oh, look at my gains that I got from selling courses. And, I'd be a millionaire. I wouldn't have to have a real job. Maybe look at the total return compared to your VT total return because you bash the strategy noob. Maybe look at the total return and compare whose total return. Joseph's? He's in all U.S. stocks, okay? U.S. has cycles of outperformance. Let's see what happens in the next decade. Dividends equals forced profit taking. It's not. Why would you want to, if you're investing for 30 years, why would you want to take profit? If you're a long-term investor, why would you take profits? What year do you think Tesla will have the highest earnings in the world? Never, ever. I'm still a Tesla bear, okay? Don't think I've warmed up on Tesla. Strongman is triggering the libs. I mean, I'm going to do a lot of stuff on my channel. I'm not just going to talk about stocks. I'm just tired of the whole grifter BS. Jeremy farted. What about dividends in a tax advantage account? I mean, yeah, they're not taxed, but you shouldn't just focus on dividends only just because they're dividends. God, this keyboard. Google doesn't pay. Google's trash. It's trash. It's trash, bro. It doesn't pay a dividend. Don't buy it, bro. Got to ask Jacob what he thinks. Who's Jacob? PPC Ian. Big pusher of dividend. Who is this freaking clown? My portfolio is down 90% since I started investing with Kathy Wood and other YouTubers. Yeah, and they're richer. Down 1% on VT. I'm sorry, brother. You should sue me. Why not buy the dividend company 3 weeks before the dividend and then sell it? Because that's called a non-qualified div. There's actually a tax rule where you have to own the share for 61 days within the 120-day window before and after the ex-dividend date. Basically, there's a rule where you can't just do this little dividend arbitrage, because if you do, the dividend doesn't count as a qualified dividend, and then you get taxed at your marginal rate. Trust me, you can't play these games. The IRS knows. I just take my dividend money, use it to pay my taxes. I don't have taxes on dividends because, well, I mean, I have some dividends because I can't help it, but I don't have an exorbitant amount of dividends. Dividends ultimately withdrawal funds. If there's no earnings to back it, the stock price will go down. I mean, it goes down anyway. All right, guys, that's about it. What's Tomer up to, you think? Oh my God, is that his name, Tomer? Oh my God, he got exposed. Oh. You clowns are so easily, like, sucked into this BS. You know, I knew Tom's full name for like 2 months. Oh, I'm going to expose him and I can get lots of views. Oh, so stupid. Any more comments? A man named AJ is currently on Echo's live. I might actually check into that real quick. He loves to debate you live because his name is AJ. It would be great to see you too. What are we going to debate about? How long does it take to become a CPA? It took me 5 months. What do you think about the Reichsmarshal? I think he's a scammer. Oh, I'm on YouTube to expose grifters. No, he just wants you to sign up for his $1,500 or whatever annual subscription. Yeah, don't put that in your IRA. Just sign up for his research. Renewal coming up. Pay off $100K mortgage or keep it in stocks and pay 6% mortgage. That's personal financial advice. I know what I would do. Why do you have a 6% mortgage? I mean, I guess rates just went up. That's crazy. You know, one day you'll leave the market with your capital appreciation on the gains, have to pay tax on it. It's no different than paying tax. No, because I've had compounded growth at a higher rate because I'm not paying taxes on the dividend. Compound out 9.5% and compare that to 10%, okay? And compare the returns of a portfolio that owns the whole market because I don't exclude dividends, because I only include dividend. I don't exclude non-dividend payers, and compare that to a dividend payer only portfolio. I guarantee you the total market will defeat any freaking dividend paying index. Okay. And yeah, I mean, I'll have to pay taxes one day, but I can time when I pay my taxes. With a dividend, you literally freaking pay it every time the dividend. Yeah, technically you do owe the taxes in that quarter, but you have to pay the taxes on the dividend every year. Do you think your VT versus German will look good without the dividends showing? It won't look as good, no. Because dividends are part of your return, but that doesn't mean that you should only buy stocks because of the dividends. Well, all the babies are sleeping, and Strong Wife is upstairs. Your hair is longer than Jeremy's list of... Yeah, I'll let my hair grow out. Jeremy Grantham, Michael Burry are saying we're going to a severe bear market. It seems very dangerous to hold even VT for those who don't have good jobs. I mean, that's a personal thing. I mean, if you don't have a lot of cash in case you get fired, I mean, maybe you should save up cash. I don't know your situation. I got a huge cash reserve in my emergency savings, and I have multiple ways to make income. Does Virginia have high taxes compared to Maryland? I don't really know, to be perfectly honest. Our income tax is 5.75%. Our sales tax is 6%. We have personal property tax that I have to pay on my freaking van and my other cars. And, of course, I have my real estate taxes. Strongman is so unsat. I'm unsat. All right, guys, that's it. I might check into Echo's thing. But, yeah, dividend stocks only are stupid. Cheers!